Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Monday, December 3rd, 2012. Well, a black body candle today. Prior day's trading we had an indecisive doji type candle, and for the previous 3 days a market that was testing above the 14.15 level, and even today testing to the 14.22 level and being rejected from that area. For the previous 2 trading days the market closed just at that 14.15 level, but today strong rejection with a black body candle. The black body denotes the sellers making net bearish progress, so there has been a swing in momentum to the sellers for the trading day today. The largest shadow on the top of this candle highlights the strong price rejection from the 14.22 area and highlights the buyers losing commitment, and the buyers have lost so much commitment that the sellers have actually closed with strong control of this market by closing down towards the low. Now we do have very strong, or a potential for strong support where the market is trading at the moment. If we look at these previous 4 candles, the highs were roughly around this 14.10 level, and for today's trading we've closed just at that level, so that is an important level moving forward. If we do see the market continue trending down, we do have very strong support around the 1400 level, round number support, but also the Tenkan is trading in that area now, strengthening that zone. So some very strong support down below, but also strong resistance up above, extending once again to the 14.15 and 14.22 areas. In terms of the Fibonacci Extension, we're examining the relationship of the current first time frame uptrend to the previous time the market was trending up, and we have had that bullish breakout up above the 261.8%. The market has been trading above there, but now looks to be capitulating to a degree. The sellers have taken control, and there is strong potential for a change of trend to the downside. This is a potential candlestick reversal pattern. It's a potential bearish engulfing pattern, and does suggest that there is potential for a change of trend. If the market does continue trending up, we do have a target up around 1450 at 423.6%, but that's after the very strong resistance that is offered around the cloud around 1435, so not too likely that the market will test up to that area. The Fibonacci ratios for this method hasn't really worked too well in this instance. Previously here it looked like there was strong potential for the trend to change around this 261.8% level, but we have been trading above there, so no clear cut indications here with the 261.8% now. Now in terms of the Fibonacci Retracement as well, that hasn't worked out too well in this situation. We had strong trading up above the 61.8%. The next target was the minor level at 78.6, and a fairly bullish breakout up above there, but the market's failed to test up to the 100% level. That was a target, and it's roughly around the bottom of the cloud, so strengthening the potential resistance up around that level if the market does trade up there. But certainly this current candle does look fairly weak and does suggest potential change of trend, regardless of the fact that the Fibonacci ratios in this case hasn't really worked quite well. In terms of Ichimoku, we have a bearish market in the long-term time frame by trading down below the cloud. We had the bearish breakout some time ago, rally back up towards the cloud here. Bullish market in the medium and short-term time frames for trading above the Kijun-sen and the Tenkan-sen. We actually had a crossover of the Tenkan-sen above the Kijun-sen, which is a bullish indication. With Ichimoku, there is usually quite a bit of delay on that. I tend to prefer to see the breakouts above or below those indicators, but this is a standard buy signal with Ichimoku, but it's a very weak one because it occurred below the cloud, and the reason that it's weak is because obviously if the market does continue to rally, it's going to run into some potentially strong resistance overhead, and that is the case here, except in this case it won't be terribly strong resistance at the moment because we actually have a thin area of cloud. So if this market is able to rally up through the 14.22 and 14.15 level, the opportunity for this market to turn bullish is definitely there over the next few days because of the thin amount of cloud that we have here. So strong potential for the market to do that. if it does trade up to those levels. But as we trade on, the area of resistance offered by the cloud will become thicker, and it'll actually move down to meet the market. So a very important period for this market over the next week or so. Now, in terms of support and resistance, I've already discussed the 1422 and 1415 areas are crucial to this market, but the 1400 level will be very, very strong. We should be looking to that area for even stronger support because of the Tenkan Sen trading around there. And if the market does break out down below there, then obviously strong support at the Kijun Sen, the pink line here around the 1390 area roughly. So a market that's giving us conflicting signals, bearish in the long-term time frame, bullish in the medium and fast-term time frames, but very strong resistance overhead and solid support down below.